Months of inventory has almost doubled recently in Calgary, meaning that active inventory is stacking up and sales have leveled off across Canada. But why? When we saw rate expectations and inflation rising, it pushed buyers into having urgency to buy. But now we're expecting rates to continue to drop, so we're seeing the inverse across the board. Rates are finally expected to drop, and not just by a little bit, we could be seeing another 1% drop by spring. The data's been in front of us for months, and the government has fought not to say that Canadians are hurting and we're flirting with a recession. Look at the spike on the small business delinquency index. Job vacancies are falling because hiring intentions are turning negative. Small businesses are hurting and they need rate drops the most. Unemployment has been climbing since the pandemic spike, and a lot of jobs that have been created over the past 2 years were government jobs, but the private sector is shrinking. There's always videos and calls for foreclosures and panic, especially when there's market volatility, but realistically, we're in a far better position than we were during the financial crisis and the pandemic. Looking at this chart, arrears typically rise 12 to 18 months after the first rate cut. So it's still too early to say what impact these cuts will have, but we are expecting mortgage delinquencies to rise across Canada in the following year. The big concern over the past few years has been those renewing their mortgages, especially those in Ontario and BC. Over 50% of mortgage renewals will happen in the next 2 years, with over 30% due in 2026. I'm sure we've all been seeing more foreclosure articles like this one. Here's an example of what the average Canadian is facing that has to renew their mortgage right now. So even though $80,000 was paid off the principal, the mortgage payments are still up over $750 in just interest. We've unfortunately seen a lot of listings pop up recently where sellers can't afford their renewal, but thankfully they have built up enough equity over the past few years that they're able to sell and have enough cash on hand to either rent or sometimes downsize into something that meets their budget and requirements. But if you're in a market where prices have gone down, like Toronto has seen lately, you might be stuck or need to sell for a loss short term. All right, quick pause on this video. Listen, before I say anything, this isn't coming from me, this is coming from the entire team. We need more subs. A lot of our viewers are still not subscribed, so please like, share, and comment below on the type of content that you'd like to see next. There have been a lot of real estate agents and investors from Ontario and BC commenting on our videos saying not to invest in Alberta and that their markets will recover. I find it funny because it does show the fear in their market, but realistically, if I had to bet on two markets seeing growth long term, in not just Canada but North America, Toronto and Vancouver would be my top 5. These two cities have definitely seen sales pull back and a price correction. They became way too overheated and saw investors and speculators leverage with rates going up. I'll give you an example. I met an investor from Toronto who would go to multiple builders and put down deposits on multiple pre-construction units. The market was appreciating so fast that they wouldn't even get pre-approved. They would assign the contract to another investor. There were some homes and condos that saw the contract getting reassigned 4 to 6 times before possession. So when the builder originally offers the home at $1.5 million and the end buyer ends up paying over $2 million a year or two later, they're paying an insane premium. Now with the market shift and rates going up, a lot of homes didn't appraise, leaving buyers to come up with hundreds of thousands of dollars or more just to close. That's the difference between Toronto and a lot of other major metros. A big part of the price appreciation was due to massive population influx, way too much leverage, and not enough homes. Even though they've seen a pullback, long-term, Toronto's a great market, especially if you can avoid over-leveraging and feeding into the FOMO. This next chart might be the most important if you're considering buying a condo in Toronto or concerned about holding one long-term. Looking at the completion dates and building permit data, Toronto will have a massive undersupply of new condos in just 3 years. These short spurts of volatility and fear might be the right time to get a discount. Canadian real estate saw a small bounce in sales in June, but new listings are close to hitting long-term averages. Active listings rose by 0.5% month over month nationally, and that's the 6th consecutive increase, which is showing that homes are taking longer to sell. and active listings were up 28% year over year nationally and up nearly 60% in Ontario. When we say Canadian real estate, we're really just generalizing the real estate market and grouping the data, but what we should really be doing is looking at the data by province and major metros. So let's take a quick look at a few provinces across Canada. Saskatchewan is seeing nearly a 20% low in new supply, and their population growth is surging. Their real estate prices are projected to see some strong growth over the next few years, so don't sleep on Saskatchewan real estate. Alberta is still seeing strong population growth, and while Calgary construction is on the rise, Edmonton is still way behind and may take the lead this year for the highest appreciating large metro in Canada. We're still projecting steady growth through 2025, and with lower mortgage rates, we may see another surge this upcoming spring. British Columbia may see a high long-term supply shortage for single-family homes. Ontario is seeing a similar trend, but nothing like BC. Even with the foreign buyer ban and the Airbnb restrictions that are hurting a lot of BC markets lately, these are short-term trends because long-term, BC might be the best province in Canada for long-term home appreciation. Ontario had a massive housing appreciation run for years. Like I mentioned earlier in the video, there was way too much leverage and fast growth, and we've seen a short-term pullback. The market may take a few years to balance out, but in the long run will outperform the average Canadian market like it has historically. In the short term, mortgage rate projections can shift. As long as inflation continues to be under control, we should see consistent rate drops at almost every single meeting. Whatever your opinion or interpretation of the data might be, it's important to recognize that small businesses need these rate drops. 50% of Canadians renewing their mortgages in the next 2 years need these rate drops, and anyone looking to purchase their first home needs these rate drops. The rate drops are inevitable, but time will tell if we held off cutting for too long, as we might see the jobs report worsen.